Hi everyone. Today we're going to talk about South Korea ETFs, KORU and EWY, which is very hot topic in the market right now. So here is the question: why all of a sudden the global investors start to pay attention to South Korea market? In the past, South Korea market was always undervalued and then cheap market compared to how much they make. But since last year, things are changed. South Korea market isn't just cheap anymore. It is now directly tied to the massive AI boom. If you're investing in AI and semiconductor industry, Korea is the market you absolutely need to know. So today we're going to talk about why South Korea's stock market is a hot topic in the world right now, and if it's still good to invest in KORU and EWY. Before we start, I post the global market news every morning in my YouTube shorts. I strongly believe this will help your investment decisions. So please check them out and subscribe to the channel. Okay, then let's get started. First, we have to talk about SK Hynix. You cannot explain the Korean market today without this company. As AI servers grow, the demand for high-performance memory is exploding, especially HBM. This is the super fast memory that sits right next to AI chips like NVIDIA's to process data instantly. No matter how powerful NVIDIA's chips are, they cannot perform well without this fast memory. Um, in America, there is a Micron. In Korea, there is a Samsung and SK Hynix. That's why Wall Street is now looking at memory companies, and SK Hynix is leading the pack. Second is the hope of Samsung's recovery. EWY looks like a broad fund for all Korea, but it is actually dominated by just two companies. According to BlackRock, SK Hynix makes up 28.5% of EWY, and Samsung is around 23.7%. Together, they are over 50% of the entire ETF. So buying EWY is basically making a huge bet on Korean AI memory. Samsung fell behind SK Hynix in the AI race for a bit, but smart investors always look at what's next. If Samsung catches up and wins in the HBM market, EWY will get a massive boost. This turns Korean ETFs into an AI chip trade, driven by SK Hynix strength and Samsung's potential. The third reason is the push to fix the Korea discount. Korean companies traditionally had a reputation for low shareholder returns and weak dividends compared to US companies. But now, under the new president, things are changing fast. The government is pushing strong value policies to improve corporate governance and reward investors. Reuters even reported on these major reforms aimed at boosting shareholder value. This matters because when global investors look at Korea, they see both AI boom and great value. US AI stocks like Nvidia, SanDisk, and Micron are already very expensive, but Korea offers a way to invest in AI at a much lower price. Investors are starting to think US tech is too high, so maybe it's time to buy Korea chips instead. The last reason is the huge point for this video. SK Hynix is planning to list its ADR in the US next month. Reuters reported that they plan to raise up $29.4 billion through this US listing. This is a game changer. It means SK Hynix is coming directly to the Nasdaq. Before, it was hard for US retail investors to buy SK Hynix directly. You had to access the Korean exchange or buy EWY or KORU ETF. But with US listing, everything changes. It will be incredibly easy for global money to invest in Korea's top AI memory player, bring way more attention to the whole Korean market. Why this is a great news? There are things to watch out for. If investors can buy SK Hynix directly in the US, some might skip EWY or KORU entirely. However, bigger picture is clear. Korea is no longer a distant market for Wall Street. This US listing proves that global big money is taking Korean AI memory very seriously. That brings us back to our ETFs, EWY and KORU. EWY is your safe, standard bet. It gives you stable exposure to Korea's biggest giants like Samsung and SK Hynix. KORU is the wild card. It can give you massive returns when the market goes up, but if the market drops, you lose fast. Even Direction warns that triple leveraged ETFs are designed for daily trading, not for holding long term. In fact, we recently saw huge volatility in Korea as a single stock leveraged ETFs came out. Reuters reported a sharp drop in the Kospi, Samsung, and SK Hynix after financial regulators issued a warning about leverage risk. This shows just how fast things can move. The Korean market is absolutely sizzling right now. AI memory growth, Samsung's recovery, government reform, and SK Hynix coming to the Nasdaq, all happening at the same time. For many investors, EWY is the easiest way to ride this AI chip wave. And for aggressive traders looking for a huge short-term gains, timing a move into KORU could be a massive opportunity. Especially KORU, the KORU ETF showed over 800% return for last 1 year. But always ask yourself, would this AI rally can be last, or if this is the AI bubble? If this market is the AI bubble, you should be careful to join these ETFs. But if you believe if this AI boom is not end this year, the two ETF can be great opportunity to make you rich. Thank you for watching my video today. I'll come back with another fun and interesting market and stock story. See you in the next video.